Welcome back, you legends. I'm Dr. Khan. Let's get right into this video. This is going to be a short and sweet video. Let's take a look at the major indices. The S&P 500 is down 0.4%, the Nasdaq is down 0.74%, and the Dow Jones is down 0.54%. Let's take a look at the different sectors. Leading today was real estate, followed by utilities, healthcare, and industrials coming in flat on the day. Consumer defensive, financials, and basic materials down about half a percentage point. And the laggards for the day were energy and communication services. Energy is down off the heels of this sell-off in oil. I covered yesterday the OPEC Plus meeting where they agreed to cut 100,000 barrels of oil a day, which is about 0.1% of global supply. So it was a meaningless cut. Basically, guys, it does nothing. They raised their output by the same in August, and they just reversed that increase in output. So just a symbolic move, and it seems that the market is agreeing with that, because look at that. We had a complete reversal to the downside. We're now near the weekly lows of last week. We're still in this absolutely ugly, horrendous looking distribution, not consolidation. Looks like distribution to me, and this one ugly bear flag. So it looks to me like oil is very vulnerable. Even if the dollar index comes down, I think oil will continue to sell off. We'll see. Going back to the stock market map, clearly we have a few pockets of green, right? We have healthcare, some financials, some utilities companies, as well as real estate and technology. Really, the only major exception that I'm seeing is Tesla. Tesla has been outperforming the market over the past couple of weeks. Very surprisingly, Tesla has shown a lot of strength. Now let's take a look at the daily chart for the S&P 500. Look at this, guys. Now this box right here, guys, is how I share my trade setups and trade ideas in the trading community. It's 20 bucks a month, and I do share every single trade and investment that I make in real time in the trading community. So if you want to support me, that's the best way you can do it. And if you simply just want to take a look at what I do and how I do it in my process and how I trade, you can take a look at it. The link will be in the description. Now, very interestingly, guys, on the daily chart, I am noticing this beautiful, beautiful descending wedge, and a descending wedge is a bullish structure. Furthermore, guys, I'm seeing a slowdown in the momentum to the downside. And on the 2-hour chart, guys, look at this. I'm seeing a beautiful, beautiful double bottom formation with positive divergence, right? We're seeing bullish divergence on the momentum, a lower low on the price action, and a higher low on the PPO. This is a bullish structure. Really, if we see any breakout to the upside, that will trigger a lot of buying, because I'm seeing a lot of sell side exhaustion signals, right? We're seeing momentum slow down significantly. We're seeing a lot of chop with no real support being broken just yet. Yesterday, I did say that we will have a slight sell-off to flush stop losses below the $390 level. I was looking at 387. We came short of that. The lowest we got was 388.5. And so this looks even more bullish now, guys. We could still see one more flush to the downside, but for me personally, guys, in my style of trading and my risk tolerance, I did in fact open a position today. And if we see a second flush to the downside, I'll be adding to my position. If we take a look at the triple Qs, guys, I'm seeing the same setup, right? We're seeing momentum to the downside slowing down. Same beautiful, beautiful descending wedge. We had a similar descending wedge right here, guys, in late April. And this period, guys, is very, very similar to this period for many reasons. One being March was an earnings month, and August was an earnings month. So earnings came out right over here. And earnings came out in late March as well. And we had a counter trend rally. We had a counter trend rally, and we're seeing a sell-off, and now we're seeing another sell-off. So I'm seeing a lot of similarities, guys. And now we're seeing the same descending wedge structure. And I'm also seeing divergences all over the place. So I'm seeing a lot of bullish technicals. So save for some bad news, some geopolitical surprise or something, we should get a nice counter trend rally. Now back to the Qs, beautiful descending wedge. We're now consolidating near these highs right here. Again, this beautiful pivot zone that I've been talking about for weeks and weeks now. We're back to this pivot zone. We're finding some support, some buying pressure, and noticeable sell side exhaustion. Let's take a look at the HYG, the smart money. Again, one of my favorite signals, and 99.9% of traders don't even know about this signal because it can show you what is going to happen based on what the smart money is doing, what the big money is doing, okay, in the bonds market. And the way to track this signal, guys, is to look at divergences, either negative or positive divergences, right? So negative divergences, guys, where the HYG keeps putting in lower highs, while the S&P 500 keeps on putting higher highs. Like all of these instances, guys, that I circled with a red circle, right? We had a double top, we had a higher high over here, another higher high, and another higher high right over here. While on the HYG, in every single example in the exact same period, we had a lower high, lower high, lower high, lower high. And again, every single divergence led to significant selling. Now, this divergence also works in the other direction, guys. It also helps us spot reversals to the upside, right? Let's take a look at what I'm talking about. Right over here, guys, I marked every single positive divergence that we've had. We had one in May, right over here, where the S&P put in successive lower lows, and the HYG put in higher lows, and we ended up moving to the upside. Exact same thing back here. Higher lows on the HYG, lower lows on the S&P, and we ended up with a nice rally to the upside. Exact same thing here, guys. Lower lows, higher lows, boom, upside. Same thing is happening now, guys. Lower lows and higher lows. So it is possible to see additional selling in the S&P to form another divergence, right? A fourth day of divergence, that is possible. Or we could simply start rallying tomorrow. We'll see what happens. But the divergence is there, big money's buying in, and I'd like to trade with the big money. Let's take a look at the VIX. The VIX continues to hold this bull flag right over here. We had a brief breakdown last Friday. I expect this resistance to hold actually, and to seize another breakdown where the S&P 500 can have a nice little recovery. We're seeing momentum in the VIX slow down significantly, so the VIX does want to move down. And please remember, guys, the VIX, the fear index, is a byproduct of the options market, right? The VIX looks at the put option premium, and when put option premiums move up, the VIX moves up because it indicates that there's a lot of fear and traders are piling into put options to protect themselves to a hedge. And so the premium moves up when the demand for options is high. And the opposite is true. The VIX moves down when the demand for options, put options specifically, moves down. And so we're seeing exhaustion in the put option demand. And in fact, if we take a look at the fear and greed index, the put to call ratio right over here, we're seeing the put to call ratio slowing down, still putting in a higher high. Market volatility slowing down, still putting in a higher high. And so the options market is still bearish, but the big money, we're seeing safe haven demand actually declining, right? The difference between the 20-day stock and bond returns is now favoring stocks. So we're seeing more stock buying over bonds. So we're seeing big money starting to exit their bond positions and position themselves for the long side in the stock market. We might see something like this, guys, just a nice little counter trend rally. Nothing major, but we'll see. Same thing here, guys, junk bonds. We're seeing demand for junk bonds move up again. And remember, guys, junk bonds and the S&P 500 are both considered risk assets by big money. And so when they want to position themselves for risk on, for the long side, for a move to the upside, they go into junk bonds. And that's why we're seeing higher lows on the HYG. I hope that makes sense, guys. Now let's take a look at my favorite stock of all time, AMD. We're hitting the lower edge of this ascending channel. This channel, guys, goes back all the way to 2016, and we've been trading within this channel perfectly, and we're now hitting the lower edge. And so I'm adding to my position. Again, guys, if you're interested in my trades and investments, please check out the link in the description. And the reason I'm adding as well has to do with this. This is the SMH divided by the triple Qs, the semiconductor index divided by the triple Qs. This is a ratio chart. And look at this, guys. Pretty much every single time we've hit these lows, we had a move to the upside. Look at this. Boom, 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 and boom, hopefully. Now, let's take a look at the dollar index. Again, I'm seeing exhaustion of the flight to safety trade. I am seeing successive lower highs on the PPO, while the dollar index is putting in higher highs. So we're seeing divergence, and these divergences often, guys, lead to a reversal to the downside. Now let's take a look at Exxon Mobil, guys. Exxon Mobil selling off again. This looks like a nasty false break rally. And if oil continues to sell off, guys, we'll see ExxonMobil unfortunately sell off. I was very bullish this name. I did enter here and I did exit, take profits right over here. In fact, I was planning to get back into this trade, but as soon as I saw that breakdown, that really nasty, absolutely disgusting rejection of the 50-day moving average, this was a clear trap by Wall Street. So as soon as I saw that, I got out of the trade. I don't want to be caught in this bull trap. So I did not end up holding this position. I just simply decided to wait and see, and now I'm seeing there's a possibility for more downside risk. Let's take a look at Tesla. Tesla is doing beautifully, guys. It's holding up over the 50-day moving average. I'm seeing Tesla now outperform the triple Qs, right? Tesla is now up 1.5%, while the triple Qs are actually down nearly 1%. So again, Tesla's seeing some strength. And if we see a nice counter trend rally, we might see Tesla go up to the 20-day moving average at $290. Let's take a look at Apple, guys. Apple continues to see weakness. And I did warn about the stock when we hit this resistance line right over here. Apple always trades very aggressively to the upside in bear market rallies. And unfortunately, it loses all of that steam after those bear market rallies end. And we also have the iPhone launch event coming up this week, guys, so watch out. If people don't like the iPhone for whatever reason, we could expect more selling in Apple. But if Apple does end up showing everybody some exciting new product or some new feature or something, we might see some strength come back into Apple. And now let's take a quick look at seasonality, guys. Look at this. Towards the beginning of September, really the first week of September, we tend to see these really nice counter trend rallies toward the middle of September. And around somewhere in the middle of September, we see the second leg of selling. And so, guys, we do have bullish technicals as well as bullish seasonality for the very short term. So be very careful, manage your risk properly, and prepare for another leg down in the back half of September. Now let's take a look at the economic schedule that we have for this week. Wednesday, tomorrow, guys, we'll have a lot of Fed speak. FOMC member Barkin, Mester, and Brainerd all speaking tomorrow. So and Barr as well. Oh my goodness, we have a lot of Fed speak tomorrow, unfortunately. So watch out. Volatility is still high. Expect a lot of volatility around these times when these people speak. Now, technicals are bullish, but something like this could end the prospects for a counter trend rally. So manage your risk. I'll be watching my positions very closely tomorrow. Thursday, we have Fed Powell speaking as well. And Friday, we'll have more Fed speakers, Evans, George, and Waller. And we have the dreaded CPI report coming out, the inflation report coming out next week on the 13th of September. That's all I have for you today, guys. Thank you so much for watching, and I'll catch you in the next one. Bye-bye.
Oh, wow. Wow.